tax or not to tax? We ask if corporate tax avoidance can ever be a good thing. Also on today's program, militancy in Africa. The Newsmakers Zaina Awa talks security and corruption with Somalia's President Hassan Sheikh Mahmoud. And in Picture This, cutting down the jungle. Demolition teams continue dismantling Calais' makeshift migrant shelters. Hello and welcome to the Newsmakers with me, Imran Garda. It was US President Benjamin Franklin who said there are only two certainties in this world: death and taxes. Well, in today's globalized world, it seems that taxes are far from certain. Some of the biggest multinational companies are using ever more complex methods to minimize the amount of tax they pay to the countries in which they operate. And understandably, those countries are not happy about it. But not everyone agrees that tax avoidance is a bad thing. In fact, many economists say that big job creators like Starbucks and Google should be allowed to get creative with their tax affairs as long as it's within the law. Today's Newsmakers are the companies under fire for avoiding taxes, as we ask if paying nearly no tax can ever be a force for good.
It's a scandal that's rocked the world of business. Some of the richest corporations on the planet using loopholes to avoid paying their fair share of tax. Cash-strapped governments looking for revenue are cracking down on multinationals to pay their taxes in the countries where they operate. Public opinion is turning against companies like Amazon and Starbucks who've dodged high tax bills in the US. And France is now seeking more than $1.7 billion in unpaid taxes from Google. But these companies say they're being unfairly victimized, and their tax minimizing strategies are entirely legal. There is a difference between tax evasion and avoidance. Evasion is the illegal non-payment or underpayment of tax. Avoidance is the arrangement of one's financial affairs to minimize tax liability within the law. Google and other tech giants use avoidance, and this is how. The U.S. company is based in California, but runs its overseas operations in Ireland, which offers a low corporation tax. That's where nearly all international ad sales go. Royalties are then paid to Google's subsidiary in the Netherlands with a low tax because it's another EU country. That revenue is then shuttled to Google's Irish office in Bermuda, another tax haven. Last year, Google moved over 10 billion euros without paying tax. The funds are invested back into Google's headquarters in Dublin, a tax move known as the Double Irish. All that has allowed Google to enjoy a 6% tax rate for its overseas sales. Companies like Facebook, Microsoft, and McDonald's have all used similar strategies, which governments are only just beginning to wake up to. When it comes to fighting multinational tax avoidance, politicians are singing from the same hymn sheet.
In the end, it's about fighting inequality, because it's insufferable to see big groups escaping from this while small and medium enterprises are obliged to pay.
But there's a growing chorus of voices arguing that, in fact, corporations shouldn't pay tax, that taxing companies hits the pockets of employees hardest, and that shareholders should be the ones paying tax on earnings. There's also a fear in countries like Ireland and Bermuda that stricter rules will scare away investment. Meanwhile, companies are battling governments in court, and countries are racing to close down tax avoidance schemes. Ireland has already pledged to phase out the double Irish tax loophole by 2020. But with trillions of dollars at stake, that gives some of the world's smartest people 5 years to find another one. Sandra Gatman, The Newsmakers.
Well, to discuss if corporate tax avoidance can ever be a good thing, I'm joined by Alex Cobham, Research Director at the Tax Justice Network in London, and in Varo, Portugal is Tim Worstel, Fellow at public policy think tank, the Adam Smith Institute. Thank you, gentlemen, for joining us. Alex Cobham, let's start with you. You don't think these corporations are paying their fair share don't you?
Well, I think they're using the law as it stands, so I wouldn't say what they're doing is illegal. The question is whether we think the rules are working as they should. Now, clearly, the effect of avoidance is a pretty major redistribution away from the kind of public spending on health and education and infrastructure that's so important for all of us, and towards top executives and shareholders. And we know that financial wealth is more unequally held than any other form of wealth. So this is basically a redistribution towards the very top, globally and within countries. The question facing policymakers is not, do we think avoidance is okay or not? It's how do we change the rules if we want corporate tax to be effective for multinationals?
Tim Morstall, do you feel icky when you hear that word redistribution?
I'm not particularly worried about redistribution either way. My arguments with Alex and the Tax Justice Network and the various people there, Richard Murphy, John Christensen and so on, is that they have three problems really when they're dealing with taxation, especially this corporate international taxation. Firstly, they're wrong in theory. Secondly, they're wrong in their particulars of their analysis of what's going on. And they seem to be working off pretty much entirely made-up numbers all the way along. The theory is that corporations don't pay tax. This is standard. Seligman from the 1890s, Harberger reiterated it in the 1960s. Absolutely every economic analysis of who actually pays the tax, which the corporations write the check for, I agree, they write the check. But the incidence of that tax, whose wallet gets lighter, it's the shareholders in the company getting taxed, and it's all the workers in the jurisdiction who are imposing that tax. Now, it's just not the company that's paying the tax. So anybody who starts going around saying companies must pay more tax is just wrong. I mean,
okay.
I'm sorry.
Okay, let's get a response then from Alex.
Tim,
okay, Alex, so
okay,
it's
Tim,
people paying
I
tax,
didn't say
not
that
corporations. Go ahead.
Yeah, I said precisely that it's people paying the tax, not companies. I don't know who Tim's responding to, but he's not responding to what I just said there. Companies are just structures through which the tax passes as the profit. The people who pay the tax are shareholders and the top executives whose pay is very closely related. But Tim does refer to some incidence research, which is highly out of date. What we find, all the most recent research shows that the majority of the tax is paid by shareholders and by those top executives. So it's paid by people at the top end. There's no question it's borne in any serious way by the average worker. It's simply not. Most of the incidence is very much at the top end.
Yes,
and that's what this tax is.
Alex, that's terribly interesting, but I'm afraid all of the economic research on the subject is against that view.
Tim, you can say all the economic research as much as you like, but it's simply not true.
Okay, let's get Tim to make his point, and then Alex will respond.
But Alex, I've read all of the stuff that you've published. I've read all the stuff that you've published. I've read all the stuff that your friends have published. I've read all the stuff that other economists have published. I've read what Sir John Merlees, who has a Nobel Prize for his study of tax systems, has said. I'm sorry, the workers in the jurisdiction which imposes corporation tax bear some of the burden of the corporation tax. That's simply true.
Okay.
Oh, well, let me agree with you there, Tim. The workers bear some of the tax. That's certainly true, but it's a small proportion. The great bulk of the incidence of corporate tax on multinationals falls at the top end, and the evidence is absolutely comprehensive on that, Tim, as I'm sure you know, because as you say, you've read all of it.
Yes, Alex, and we also know what it is that determines the split between the shareholders and the workers. The larger the economy and the less mobile capital is, the more it falls on the shareholders. The smaller the economy and the more mobile capital is, the more it falls on the workers.
Okay.
And we know this. This is the mechanism.
Okay, I want to broaden this out and move on a little bit. And looking forward, Alex, Pierre Moscovici, the EU tax commissioner, said these recent proposals by the European Commission meant, quote, the days are numbered for companies that avoid paying tax at the expense of others. And of course, we know Google paid about $200 million recently in back taxes to the UK government. Are you encouraged by all of that, Alex?
I think the most encouraging thing is that we're seeing finally movements on the the key transparency initiative that Tax Justice Network actually proposed when we were set up in 2003. Now, this is for public data to be made available by companies showing their activity and the profits they pay on a country-by-country basis. Now, that the OECD has now required that information to be provided to tax authorities, which is great progress. What we need, and what the European Commission and indeed the UK Chancellor George Osborne are now discussing, is having that information made public. That would allow the public to hold multinationals to account when they're conducting a lot of activity in one place but paying no tax. It would also allow us to hold account a tax authority like Luxembourg that is very actively trying to attract the profits that arise from economic activity in different jurisdictions.
Yeah, let's talk a bit about Luxembourg. Tim, interesting that Alex mentions it. With LuxLeaks in 2014, it showed that 340 multinational companies funneled profits through Luxembourg to lower their tax bills to as little as 1%. Is that fair game? In your opinion, are you comfortable with that, Tim?
Well, I'm afraid the statement there is wrong. What Luxembourg allowed people to do is delay the payment of a tax bill. It doesn't actually allow people to only pay 1% tax on their profits. Profits eventually, if they're ever to get back out to shareholders in dividends or in stock repurchases and things like that, have to actually flow back to the original country of domicile or country of residence of the parent company, and that's where and when they get taxed. We've talked about Google and Bermuda and so on, and if Google ever wants to pay those profits out to Google shareholders, they have to go back into the United States.
Okay, let's
get
a response from Alex.
Wait, no. Once they cross the border into the United States,
quickly,
they will pay 35% tax. These deals can delay a tax bill. They cannot postpone it forever.
Okay, it's just delaying the tax bill, not postponing it forever. Alex?
Well, in some cases, we've seen tax bills deferred, as it were, for 35 years. That's quite close to not paying them at all, and we all know that cash is worth more now than it is in the future. So I don't think it's a terribly strong argument Tim has there. What we're really talking about here is ways to separate the profit on economic activity from the place where that economic activity takes place. We're not talking about delays. We're not really talking about shifting real activity across borders. We're simply talking about gaming the system. Now, I don't really think we can blame companies for doing that, although I think individuals within those companies should perhaps think about the effect on health and education spending, for example. But what we can blame is policymakers for allowing a set of international rules, first established under the League of Nations in 1928, to still be governing the way that we try and do this taxing now. The time has come for serious change in international tax rules. LuxLeaks is just one example of how badly broken the rules are. And I think we're going to see this pressure continue to grow for a very serious attempt to tax multinationals.
Okay, we are running out of time. Tim Worstel, transparency is crucial. All of that makes a lot of sense. It sounds reasonable, doesn't it?
Well, it would do, except for the fact that I've read very much about this country-by-country reporting stuff, as Richard Murphy claims he invented it. And the problem is that the people who are arguing for this transparency, Murphy, Alex, Christensen, Prem Sikka, Sol Picciotto, they don't actually seem to have the ability to actually read a set of accounts themselves. There was all this fight about Starbucks not paying tax in the UK, and people pointed out, well, Starbucks was making a loss. You don't pay profits tax on the losses that you make. I would finally, as my sort of, at the end of my thing here, go back to what Alex actually said at the beginning. I mean, if Alex really believes that it is investors who end up paying the tax, the corporation tax, then why don't we just abolish corporation tax and tax the investors? Just tax dividends and capital gains at ordinary income tax rates. And you can say, well, Google will be making a bid in England, so the Google shareholders have been making something out of England. But England's got multinationals that are based in the UK too, and majority UK shareholdings. It all comes out in the wash pretty much, amongst the rich countries. We're all invested in each other's countries. Why not? Why not just tax income to shareholders and be done with the whole system?
The obvious reason why not, Tim, is that it would be very, very bad for low-income countries.
Alex, I'm going to give you 20 seconds to respond because we have totally run out of time. 20 seconds to squeeze out of this, please. Go ahead.
Now, as Tim says, if you taxed investors only, it might be a wash between rich countries. It would also result in a major redistribution, a major worsening of the inequality among countries at the moment. The distribution of global taxing rights is such that lower income countries do especially badly. So that proposal would simply make things worse.
Okay, Alex Cobham and Tim Worstel, thank you very much. That was really informative. Still to come on the program, in an exclusive TRT World interview, Somali President Hassan Sheikh Mahmoud tells the newsmakers that Boko Haram fighters receive training in Somalia. And in picture this, clearing Calais. Migrants lose their homes once again, this time to bulldozers. With the world focused on the war in Syria and the increasing global threat of Daesh, there is concern the danger posed by militants in another region is being underestimated. Africa. Militant groups are operating across the vast continent, and Nigeria is home to the world's most deadly terror group, Boko Haram. The Newsmakers Yvette McCullough takes a look at the threat militants pose in Africa.
Fear, violence and survival have become a fact of life in many parts of Africa. Militant groups have exploited instability and power vacuums across the continent. Some of them now control large territories. Many are offshoots of Al-Qaeda and are fighting amongst themselves for power and territory. And governments and militaries are struggling to counter the growing threat. Groups with links to Daesh have captured territory in the north. Militants claimed responsibility for bombing down a Russian passenger plane in Egypt's Sinai in October. And Daesh has taken advantage of the breakdown of law and order in neighbouring Libya. It has also crossed over into Tunisia, carrying out attacks targeting the country's tourism industry. Al-Qaeda in the Islamic Maghreb is also waging war in Africa. The group mainly operates in this region. While its influence has decreased since 2013, it still has a presence. It attacked a hotel in Bamako in November last year and killed dozens of people in a hotel in Burkina Faso's capital in January. The single most deadly militant group in the world is Nigeria's Boko Haram. According to the Global Terrorism Index, the group killed 6,644 people in 2014, surpassing even Daesh. Al-Shabaab once controlled large parts of Somalia, but has now been pushed back into small pockets of rural territory. But while the group is in retreat, it is far from gone. It's carried out 4 major attacks so far this year. On Sunday, at least 30 were killed in twin explosions in the southern city of Bardoa. As the threat increases, so too does the regional and international response. A coalition of troops, including Cameroon and Chad, have had success in fighting Boko Haram, and the US has pledged $5 million in support. In Somalia, African Union forces have been fighting Al-Shabaab since 2007. They say they will reinforce military operations, but the EU has decided to cut funding for AMISOM troops by 20%. That has raised concern about the future of the peacekeeping mission and whether failure there could further destabilise the region. Yvette McCullough, The Newsmakers.
The Newsmakers spoke to Somalia's President Hassan Sheikh Mahmoud. He told us that some Boko Haram fighters have been trained in Somalia, highlighting the fact that militant groups are prepared to travel across Africa to receive specialised training. Our correspondent Zaina Awad sat down with the Somali leader and talked security, corruption and Africa's militancy problem in this TRT World exclusive interview.
You've recently talked about links between Al-Shabaab and Boko Haram. What more can you tell us?
You know, one has to understand the dynamics of Al-Shabaab and how they come to exist in Somalia. One common phenomena for all extremist organizations is extremism is a sort of an ideology. And the ideologies have no borders and have no citizenship. One of the major reasons why Al-Shabaab become Somali was because in Somalia there was territories that were not governed by no one. So Al-Shabaab, they invited, there was a small local organization mainly led by people who came from Afghanistan during the jihad against the Soviet Union and later on with Osama bin Laden, Al-Qaeda. When they came there, now they see that this is a great opportunity and they invited many of their friends. They get together there. They trained Somalis, they trained non-Somalis in the neighboring countries. This is what made now come all other extremist organizations that are linked to Al-Qaeda. They said the easiest place, the closest place is Somalia. So that's why many of the Nigerians come to Somalia and they were traded, number one, and then they have been taken with them non-Nigerians from other African countries, went them together. That's how Boko Haram and many of the Al-Qaeda in the Maghreb, they were also trained. Al-Qaeda in the North Africa, they were also trained there. Because there was a free territory that nobody, no threats, no nothing, no information. So this is what made, and there are some reports that indicate the numbers and the people that have been trained in Somalia and who later on operate in Nigeria.
Are you saying that there are other extremist groups in Africa that have also trained with Al-Shabaab in Somalia?
In recent times, this has been denied because there was a times when more than 2/3 of Somalia, the central and the southern regions of Somalia. Somalia is 18 regions. 11 of those 18 regions one time was fully controlled by Al-Shabaab. That was the days in 2000, 2001 until 2006-07 when the whole thing then changed. And then when I came to the office in 2012, Al-Shabaab was just in Mogadishu, outside Mogadishu, just they were pushed a little bit outside Mogadishu. There were times that the government, the transitional government, was controlling only 4 districts out of the 17 districts of Mogadishu. So from there, we pushed Al-Shabaab now to the remote villages.
Why is Al-Shabaab still able to operate in parts of Somalia?
Because, you know, Al-Shabaab, they were controlling the whole territory one time. And then when I came, they were having the capacity to attack the State House, to attack the Parliament, to attack the Justice House where all the courts do, to attack the AMISOM headquarters in the Mogadishu International Airport. Today, as you can recall back on the record, they are attacking restaurants, hotels, busy streets where people get together. That's an indication how their capacity now is depleted. But still, they are not eliminated because the war against Al-Shabaab or against extremism is not military only. So far, we have been doing the military war. But the war has an economic aspect, social aspect, of which rehabilitation aspect. There are certain other aspects that are still remaining. They melt down into the society now. They don't have their own territory, but they just melt down. The society, they are there watching and they attack any vulnerable place and any vulnerable person.
Why is Al-Shabaab still able to operate in south-central Somalia?
Maybe there's a lot of reasons, but the only one reason, very important, is there were local administrations for a long time there. Over 18 years, both Puntland and Somaliland, there were local administrations that controlled the territory. But in south-central Somalia, there were no. It was an empty vacuum space where they can occupy. That's the difference.
In today's Picture This, refugees in France have clashed with police as they watch their makeshift homes being razed to the ground. France began clearing the Calais camp, known as the Jungle, on Monday, with the promise to rehome its temporary residents. But many are refusing to move out. Let's take a look. Today's newsmaker has been corporations like these, all accused of tax avoidance on an industrial scale. For years, Google, Amazon, and Starbucks' smoke and mirrors accounting methods have sparked public outrage. French authorities have demanded nearly $2 billion in back taxes from Google. But in January, Britain settled for 10 times less than that amount. Critics say governments are scared of standing up to the multinationals, who, after all, create thousands of jobs and can easily relocate to a more favorable country. And with Google paying less tax around the world last year than in the previous 5 years, accusations of double standards and sweetheart deals will continue to fly. You've been watching this edition of The Newsmakers with me, Imran Gupta. As always, thank you for watching. Bye-bye.